Let me know when you're ready, Antoinette.
We're live.
Okay. Welcome everyone. Today we have a great webinar for you here today. We're going to talk about blockchain and Web3 space for sure, crypto, around the crypto space. The speaker today is Sean DeManta. And what we're going to cover today is really looking at looking in retrospective, the history of crypto and the Web3 space, why it's important, and the ones that are gaining momentum in this space, right? So that's mainly the topic today. Of course, we'll do a follow-up at the JTDA BizTech conference later in November, where we probably go in a little more in-depth on the topic. But for today, we just want to give an intro, talk about the space, and Sean is an expert in this space. So let me introduce Sean DeManta. Sean is an expert on all things crypto Web3 with focus on investment in the DAO space. He's also a co-founder of the founding team of Hydra Ventures DAO, world first investment DAO fund of funds. He's also a product manager here at Google for both YouTube and Google, and he's very much involved in building products of various types, leveraging emerging technologies. He's also been looking at blockchain and the whole Bitcoin space from back in 2013. So he has an extensive experience in this space. So I want to turn it over to Sean, and we'll take it from there. Before we get started, Sean, what we're going to do is let you do the presentation. We are streaming on YouTube as well. We'll get questions from the audience. So at the end of the presentation, we can field some questions. Okay, it's all yours, Sean.
All right, thanks, Larkland. Thanks everyone for joining as well. I'm going to share a brief presentation, and hopefully I can leave some time for a Q&A as well. I will go ahead and share the presentation I have. Can you all see my screen?
Yes.
Okay. As Larkland mentioned, I'm going to go into blockchain, crypto, and Web3, kind of the history, why it matters, and where it's really going. Just a quick disclaimer, this is not financial, investment, or legal advice. Please do your own research. Anything I talk about today is purely for informational purposes. I do have kind of interest in many different areas, and I'm really excited to share really what you can learn about the blockchain, crypto, and Web3 space. So just a brief reintroduction. I'm Sean. These are some of my social links as well as some of my affiliations. A lot of this terminology may seem less familiar to you right now, but don't worry, as we go through the presentation, things like DAOs, DAOs, decentralized autonomous organizations, are going to become a lot more familiar. My crypto journey started in 2012, 2013 with Bitcoin and Coinbase. So the guy in the center there is Balaji Srinivasan. Unfortunately, I'm not pictured here, but Balaji was quite formative in my thinking around crypto around this time period of 2012, 2013. Up until this point, I'd known Bitcoin for a few, maybe less than honorable mentions in the press. I think had been primarily used in kind of illicit purposes on a platform called the Silk Road, where individuals would trade Bitcoin for drugs, and that kind of turned me off. So I didn't really participate in Bitcoin. And then two, it had been used for kind of relatively silly things like paying for a pizza. I think somebody traded 5,000 Bitcoin for a pizza at one point, very early on in Bitcoin's life cycle. But let me actually go into some of the fundamentals and the history before we jump into what Bitcoin is, what blockchain is, what crypto is. I think what we all can probably understand is that the world largely is centered around ledgers. If you think about any form of human cooperation, relationships, banking records, legal contracts, financial statements, all ultimately depend on a ledger. This is an accounting of transactions of financial or legal rights over to different individuals, usually relying on a trusted intermediary like a bank, a law firm, a lawyer, somebody that we place our trust in, an institution. Alongside ledgers, there are a lot of work in the mathematical world around cryptography. Cryptography is classically defined as the secure communication in the presence of adversarial behavior. A lot of cryptography was used in World War II, for example. If any of you have seen the movie Codebreakers with Benedict Cumberbatch talking about some of the techniques used to hide communication from enemy front lines and spies. But it has a lot more applications beyond there. In the 1970s, there was also a movement called the cypherpunk movement, which was really the foundations of the modern cryptocurrency landscape. And really, the individuals in this movement were focused on how do we use the notion of secure communications to advance specific goals and parts of society. Come 2007, 2008, there was the financial crisis, and I realize I'm repeating a lot of perhaps what you know, but bank collapses, bailouts happened. It really served to diminish trust in our financial institutions and the fractional reserve banking system as a whole. This is one of the headlines that came out of the UK, the Times in the UK, the Chancellor on the brink of a second bailout for banks. This is a interesting headline that actually played a role in the formation of Bitcoin. So come to the end of 2008, we see this white paper released by an individual, a group of individuals, no one really knows, named Satoshi Nakamoto. And what Satoshi outlines in this paper is what he calls a peer-to-peer electronic cash system, but basically a way to create a trustless banking system effectively that doesn't require an intermediary for individuals to transact with each other. That's because people trust in the network itself, this peer-to-peer network, the consensus mechanisms used to make sure that there's integrity in this network, and a bunch of other underlying mechanisms, which I'm going to go into a bit later. But this is a seminal white paper that created the first, what is commonly known right now as cryptocurrency and blockchain. The first Bitcoin was mined in 2009, January 3rd, I believe. And the first transaction actually had the words that I had shared from that London newspaper. Basically, if we go back there, Chancellor on brink of second bailout for banks. So this is a direct reaction to a lot of the distrust in the financial system that was occurring around that time. There were multiple new concepts introduced with Bitcoin. Decentralization of trust. So how do we not have to trust the central intermediary? How can we decentralize the financial system? How can we create a better store of value than gold or fiat? Gold degrades over time. It's a physical entity that has material properties and is subject to the laws of physics. Fiat money has its own issues with regards to inflation and degradation of value. What if we could create a purely electronic store of value that was better than gold and fiat? In fact, 10x better. How could we enable anybody to basically have these wallet addresses where they could custody their own cryptocurrencies, these digital currencies, just by having a self-custodial wallet, something that they controlled? And there's this notion of a distributed ledger of transactions. So if I go back to the notion of a ledger, instead of having this trusted intermediary in the middle, how could we make sure that this ledger is effectively distributed across multiple parties in a decentralized fashion? One interesting thing about Bitcoin compared to other assets like fiat like the US dollar or even gold is that there is a fixed supply. Only 21 million Bitcoin can ever be created at an ever decreasing rate. The last Bitcoin, fractional Bitcoin, will be mined in 2140, so about 100 plus years from now. There's currently about 19.2 million Bitcoins in circulation. But before I go deeper, let's explore what is a blockchain in itself. So in this slide, I'm going to talk through kind of piece by piece what a Bitcoin layer 1 blockchain and how it works. So a block is basically, I'm simplifying things a lot here, but think of it as almost like a file, like a computer file that you have. It's a file that's created every 10 minutes, and it records all transactions between Bitcoin users represented by wallets and is limited to 1 megabyte of data. So similar to like a typical image file that you might download off the internet. And that typically restricts the amount of transactions that can happen in that block to 2,000 transactions. These blocks are chained together in kind of a historical order, or reverse chronological historical order, and contain all the records of transactions to date. This is how you build trust in this overall record, because the longest record is ultimately the canonical, the de facto representation of all transactions that have happened on the Bitcoin network. So almost like chaining these files together in a sequential order. The transactions in a given block are verified by what are called validators via this thing called proof of work consensus. So these validators typically have very powerful computers or rigs of computers that they use to what is called mine Bitcoin. But what they're doing is they're actually using increasing computing power to solve increasingly complicated cryptographic proofs, which prove the order of transactions. And usually the miner or the set of miners with the largest amount of computing power, CPU power, is the one that has the highest probability of verifying these transactions. This is how we decentralize trust to these computers so that we don't have to rely on a single entity. The selected validator who verifies that transaction, the ones that verify that transaction are rewarded with Bitcoin block rewards. And this rewards rate declines over time. So initially it might have been in the hundreds of Bitcoins. Right now it's about 6.25 Bitcoin per block. And I represented Bitcoin by its symbolic representation here. And once again, all of this is illustrative. I will note that wallets are typically denoted by this long string of numbers and letters, which is basically a hash for the wallet address. It represents a unique wallet. People can have multiple wallets or a single wallet. So that's typically how a blockchain works. And this happens in perpetuity. So every 10 minutes, a new block is being created on the Bitcoin blockchain. That begs the question, what is a cryptocurrency if that's a blockchain? So a cryptocurrency is really the token rewards, like I mentioned, the Bitcoin that is awarded to miners, but also the means of exchange between individuals on this network. It's kind of separate from the notion of blockchain, but also intrinsically linked to the notion of blockchain in the sense that this is the financial unit of value. Another key value that I forgot to mention about Bitcoin is the censorship resistance it has. So because there are so many different miners, and I forget the exact number, but it's a significant number of miners out there, they are less apt to be censored by any single entity. So even if a single country, for example, China, turns off Bitcoin mining and does not allow Bitcoin mining, these computers to mine Bitcoin, that capacity will be picked up somewhere else around the world. The other thing about cryptocurrencies is that they have characteristics like money, supply, inflation, things like that. So if you think about the US dollar being significantly, you probably heard about inflation over the last year or so. That can be programmatically set in the algorithm that governs the blockchain. So in the case of Bitcoin, only 21 million Bitcoins can ever be created. The inflation of the supply is at an ever decreasing rate. And the Bitcoin itself is not physical. You can't hold it. It's purely digital. It's really represented on this ever-growing ledger on the blockchain. It's also a fungible token. So similar to how you can exchange, let's say, a single gold coin for another gold coin, another Bitcoin can be exchanged for another Bitcoin. It's virtually indistinguishable from another Bitcoin. So that's an important concept to hold on to, but a lot of the cryptocurrencies, all of the cryptocurrencies that you hear of, whether it's Bitcoin, Ethereum, Solana, et cetera, they're all fungible tokens. What enabled the growth of crypto, and what I had alluded to earlier in my journey, is that centralized exchanges enabled average individuals who don't have computers and who don't necessarily know how to run a validator miner to mine Bitcoin, can purchase Bitcoin on exchanges by linking up their bank accounts and providing some level of KYC, basically know your customer, providing your government issued ID to use to be able to acquire these in a fully custody. So these exchanges like basically hold the Bitcoin for you on a wallet that they control, but that you can always withdraw from. And they take a % fee on all trades, and that's roughly their business model. And this is the first real successful business model in crypto, is exchanges basically taking anywhere from a 0.5 to a 2% fee on trades. The next biggest event in the crypto world is the introduction of Ethereum by the individual that you see on the bottom right, Vitalik Buterin. So Vitalik Buterin introduced Ethereum at Bitcoin Miami 2014. And what Ethereum is known for is being the decentralized computer blockchain. It's kind of like Bitcoin, but it introduces this concept of smart contracts, and that allows for programmable money. You can control Ethereum interactions via smart contracts and decentralized apps. And this is going to be interesting later in the future discussion that I go into, is that users with wallets can interact with other wallets via smart contracts. Basically, based on specific conditions, they can interact with these trustlessly. These are apps that basically exist in perpetuity, and users and wallets will pay gas to transact with these apps. I'll share a few examples of these in the next slide and the coming slides. One interesting thing about Ethereum is that it was one of the largest crowd sales ever. And Ethereum was different from Bitcoin in the sense that there was a certain supply that was pre-mined by Vitalik and his co-founders, and sold to investors in exchange for Bitcoin at a fixed rate. Ethereum, unlike Bitcoin, at its start did not have a fixed supply. So theoretically, it could be inflated to ad infinitum, basically. One really interesting application of Ethereum, and one of the very first applications, is the DAO. So what is a DAO? It's a decentralized autonomous organization. That means there's an organization with no centralized team, and transactions or actions occur automatically based on a smart contract. This is a program that you can interact with on the Ethereum blockchain. So, for example, VDAO was at the time, one of the largest crowd funds, where it raised $150 million of Ethereum from 11,000 people in exchange for DAO shares. They would in turn use that to invest in startups and tokens, et cetera, in theory. And the shareholders each could propose, hey, let's say I want to invest in XYZ token. they would put that up for a vote, and individuals based on the amount of shares that they have could vote for that. And the majority vote would ultimately, after a certain period of time, would automatically execute and that investment would happen. So you don't need to rely on an individual to make that investment. You rely actually on the smart contract. Once again, this goes into the theme of decentralizing trust and distributing trust. The challenge with the DAO was that there was some major security flaws in how it was initially set up. So there was a huge hack where about $50 million worth of Ether at that time was stolen, and that caused a lot of controversy in the community. The community voted to hard fork, which is basically making a copy of the original Ethereum chain and rolling back all the transactions to date and calling that previous chain, the original chain, Ethereum Classic. The Ethereum you know today is this forked chain. And that's maybe a black scar on the community, but it was a real test and a tribulation that the Ethereum community survived, and it's still existing today, stronger than ever. In 2017, you started to see what were called initial coin offerings. So a lot of Ethereum copycats, I mean, Bitcoin copycats, raising money, trying to create Ethereum killers. A lot of these that I listed here don't exist today, or are shadows of what they were at the time. So I think Tezos at the time raised $232 million. A bunch of others raised multi-million dollars, where they exchanged, allowed investors to buy tokens at a relatively discount rate at the promise of that growing in significant value. In 2018 and 2021, a number of other copycat blockchains emerged, and these were more formidable. So you've probably heard of Solana, Avalanche, infamously Luna, Terra Luna, the one that crashed earlier this year and basically wiped out $50 billion in value. Cosmos, Binance Chain, multiple different L1s were born in this era. And what you started to see is that even before these blockchains had any utility, any interesting applications, individuals were incentivized to take part in this network because they were getting immediate financial utility. And if you were early, you could cash out really on that financial utility, which is opposed to a lot of the traditional network effects that exist for other apps and products that are out there. In 2017, we saw the first non-fungible tokens, and one you've probably heard of is CryptoPunks. So this was basically every CryptoPunk you see on the left, there are 10,000 of them, were a unique token. So they had unique characteristics. They had a unique token ID. So instead of being fungible, you could trade one for another. They had distinct characteristics. They had different things which were making them rarer or more sought after than others. At the same time, there was the emergence of something called CryptoKitties created by a company called Dapper Labs, and they created a token standard which was ultimately used to represent the NFTs that we have today. So CryptoKitties were basically these little trading cards where you could basically breed them together and create new CryptoKitties. And at the time, there were so much transactions on the Ethereum blockchain that it congested the whole network, and it required a whole new set of innovations to happen to the network so that it could operate efficiently. In 2018, we started to see the first real applications of what are called decentralized finance, or DeFi. So Uniswap is the OG original decentralized exchange. So remember how I talked about centralized exchanges back here, where there's a trusted almost like very kind of non-decentralized. There's a trusted intermediary. It's almost like a Robinhood or a E-Trade or something like that, where you could buy cryptocurrencies in exchange for fiat. In this case, when it comes to Uniswap, Uniswap initially launched on the Ethereum blockchain. And what Ethereum allowed developers to do is basically create a coin. Anybody could create a coin just using a smart contract. And as long as you created a coin, a cryptocurrency, a digital currency on the Ethereum blockchain, you could exchange it for another cryptocurrency. In this case, I'm showing the Uniswap native token versus Ethereum, but basically you could swap any token for another token based off of a mathematical function and the smart contract without requiring any human to be involved, human or individual or institution to be involved. This is revolutionary, and Uniswap these days does about $40 billion in monthly volume, which is really significant. Back in the day, really not much happening. 2018 also saw the emergence of OpenSea, which is the world's largest NFT exchange now. And this is just an example screen, but this is where users could buy and sell NFTs. Just like we talked about the CryptoPunks and CryptoKitties of the world, there was a whole new surge of NFTs that emerged. These are ways of creating unique tokens with different types of properties, which users could trade. And why NFTs are interesting are because these confer ownership rights on digital assets, unique digital assets. And that's really important when it comes to the internet, when it comes to creator earnings. So creators can actually add a royalty fee to each of these NFTs and earn not only from selling the initial set of NFTs that they've created, let's say 10,000 NFTs, like 10,000 Ether puffs, for example, but they can also get a ongoing royalty on secondary sales. So if a user originally bought one of those original 10,000 NFTs, they sell it to another user, let's say the royalty is 10%, 10% of that sale value goes back to the creator. So this is a new way for creators on the internet to earn money. We even saw NFTs proliferate the gaming world. And one really interesting example of that is Axie Infinity. This is one of the original play to earn games. So basically, this blew up in the Philippines, and you see a lot of individuals from the Philippines playing Axie Infinity. And why it blew up and why it's interesting is that people were actually able to earn more money playing Axie Infinity than they were in the most common jobs in the Philippines and Manila, like call center jobs. And that really lasted through 2021, but that was a real eye-opening moment in terms of what the opportunities of crypto were. Basically, you'd have to play this game, you'd have to buy these 3 gaming NFTs, basically 3 of these little creatures here. And the longer you played and the more you battled, you'd earn these cryptocurrencies, which you could ultimately exchange for fiat. That would become your new income stream. Over time, these evolved into newer and different models where you could rent them if you couldn't afford these NFTs as these values of these NFTs increased significantly. It created many interesting mechanisms. In 2020 was when Web3 became popular again. So this is where the term Web3, which was originally coined by Gavin Wood, one of the Ethereum co-founders, that didn't really take surge until 2020. And it touches upon the themes of ownership. So a lot of these tokens confer ownership over digital assets, ownership of your business as a creator, an online creator. If Web 1 was about reading, Web 2 was about read, write, kind of the social media era. Web 3 is about read, write, and own, as Chris Dixon, a partner at Andreessen Horowitz, tweeted late last year. 2020, we saw a significant surge in decentralized finance, where the total value locked in Ethereum-based smart contracts grew significantly to multi-billions of dollars. So these are the amounts of Ethereum that people are giving to protocols like Uniswap in exchange for earning significant APR or yield. So if you think about a savings account, the typical savings account, you're earning, 0.5% or something like that. In a lot of cases with Uniswap and Compound, which is actually the decentralized finance protocol, which generated the DeFi summer of 2020, you could see people earning 10+%, even 100% APR, all temporary, but that attracted a lot of activity to take part in this decentralized finance system. In 2021, we saw the reemergence of Dapper Labs. So if you remember Dapper Labs from CryptoKitties, they created this really addictive and popular crypto game. They also created something called NBA Top Shot. And NBA Top Shot was basically this video NFT, a highlight of, for example, Steph Curry, the star of the Golden State Warriors, multi-championship winning team. And you would trade these among different users. And it almost created this new digital sports card, but video sports card trading movement. And that spurred a huge boom in NFT trading. Whereas the prior years had only seen probably $100 million or so of trading. 2021 saw billions. I think the last count I saw was $20+ billion traded that year. And one of the other significant projects that came out was actually a CryptoPunk copycat called Bored Ape Yacht Club. And this is where you started to see not only more talented artists enter the space, you saw tons of copycat projects. Everybody and their relative was releasing new 10K, 10,000 profile picture PFPs. Basically, each image was relatively similar, as you can see here. They might just differ by a specific characteristic, like a hat or an expression or a piece of clothing. Another interesting development in 2021 is the emergence of Nouns DAO. So Nouns DAO is a DAO. Remember the DAO from 2016, but now we have this new mechanism of NFTs where a new NFT is minted per day. In this case, it's represented by this crown-like figure here with glasses, and people would bid on this noun. And in this case, this was a couple days ago, somebody bid 30 ETH, 30 Ethereum, which is about probably $40,000, $45,000 given today's prices. But overall, there's been 488 of these created, one per day. And with each of these funds, it goes into our treasury to create the world's largest open source brand. What Nouns has done is they've done everything from create Super Bowl commercials to doing brand partnerships with individuals across the stuffed animal industry, creating their own TV series, probably in the works, creating their own artworks. So this is where you see a group of been under 400 people getting together to create a new brand, the new Disneys of the world. I talked about creator earnings. NFT creator earnings were about 4 billion in 2021. So this is a huge boon for artists out there. Digital artists prior to NFTs, even relatively mildly popular musicians or even digital artists were probably earning pennies on the dollar. And this is a huge way for them to earn money if you compare it to other creation platforms out there where you have to achieve significant scale to even earn any money. 2022 also brought a pivotal moment to Ethereum, the merge. So Ethereum, I mentioned, had been almost like a copycat of Bitcoin with smart contracts. It moved to what is called the proof of stake consensus model, where basically the order of verification is based on how much Ethereum you have staked, basically locked in a smart contract, and allows you to be the top validator at a higher probability. It's a much less energy intensive process than basing on computing power, and it immediately reduced global energy usage by 0.2%. Think about that. That is significant in its own right, despite a lot of the climate change critics of Bitcoin and Ethereum and the like. It also created a disinflationary supply of Ethereum. So I remember how I mentioned how Ethereum effectively had no cap on its inflation. This allowed for Ethereum to actually go deflationary, for the supply to reduce over time. There's this new emergence of things called L2s. Remember how I talked about a layer 1 blockchain? A layer 2 is really focused on the execution of transactions. And a lot of these help speed up Ethereum's blockchain. Alt L1 suddenly look a little less competitive compared to Ethereum, but it's time will tell whether this is actually the case. What's next? There's a lot of talk about Web3 social, gaming, investment DAOs, refi, which is basically climate change focused tech, decentralized tech, and decentralized science. So I've shared a couple examples here. Farcaster is basically Web3 like Twitter, effectively. There was a game called Stepin, which is focused on if you had this NFT and you, based on the number of steps you took, you could earn these tokens, which is really cool. You could basically get paid for being healthy. There's new veterans of the gaming industry entering, like Limit Break. Refi is focused on, for example, putting carbon credits on the chain. And then there's also VitaDAO, which is focused on advancing longevity, investing in longevity cures, so anti-aging medicines via a decentralized autonomous organization. There's plenty of directions that it could go from here. Once again, I'm not advocating for any specific direction, but wanted to thank you all for spending the time to listen to my presentation. Hopefully it was useful. Once again, you can find me at these socials. Larkland, I don't know if there's...
Yeah, thank you, Sean. That was very educational. Definitely want to see if we had any questions. Javon, I don't know if you have any questions. I know you're local there in Jamaica. I don't know if you want to go with any questions, but
Sean.
maybe first, go ahead, Javon, go ahead.
No, so hey, Sean, thank you so much. You've really highlighted a few stuff for me personally. I'm wary of crypto overall because I just don't understand it, and we fear what we don't understand. So I have a better understanding of it now. What I wanted to ask is, how do you see crypto in the next 5 years, especially, with the whole, I'm digging into your brain here, but with the whole, Russia-Ukraine thing and gas prices and all that, well, how do you see crypto? Broad question, yeah. I know. I'm sorry.
Yeah, I mean, I think you're going to continue to see a growing adoption of cryptocurrencies. So what's really interesting is seeing nation states adopt cryptocurrency as legal tender. We saw that with El Salvador, where I think the prime minister or president had mentioned that they would accept Bitcoin as legal tender. Especially, I'm really interested to see where cryptocurrency goes outside of really where a bulk of the attention is, like in the US, and where it can enable more and more use cases where banks are even less trusted than they are in the West, in the US. And if you think about, I remember talking to a friend from Pakistan and how a lot of the technologies there can help a lot of individuals who are unbanked to take part in this new financial ecosystem where they don't have to have an income even to participate. I think that's what's exciting to me is the opportunity to empower many, many more individuals and to transact in a new financial ecosystem, but also many, many more individuals to be creators and to actually earn money off the internet in ways that they couldn't before, that required them to get to pop star level of fame and recognition before they even earned a single cent. So I think that's where things are going. I think we'll start to see more regulation probably, especially on the US and the EU side, especially after certain events have happened. But yeah, high level thoughts on where I think it's going.
Yeah, thank you for especially the artist section that you had mentioned. That was so brilliantly explained because yeah, I can see that benefiting us as Jamaicans so well. So thank you for that.
Definitely.
So I have a question, Sean, around if an individual want to be an expert at this in terms of working in the whole blockchain space or Web3 space, what's the best way to go about it to become an expert?
So I'd say to become an expert, I would say there's a couple different aspects. I think one is just like learning the basics. And I think reading the Bitcoin white paper is a great start. If you just Google Bitcoin white paper, it'll be your first link that you find. I think the second thing is there's a lot of great information on Twitter. Some good people to follow are like Chris Dixon, Balaji Srinivasan, and there's a lot of like very good information out there. Andreessen Horowitz, A16Z, crypto. If you also Google that, they have a lot of great resources on the topic. I would also say if reading information is not the best way that you absorb information, I'd also say there's a lot of great videos out there. So Whiteboard Crypto basically there's this individual who whiteboards out crypto concepts to give you a better understanding, Finematics, etc.
Yes, that's great. That's great. And is any course that you recommend? Any, I know like Udemy and those places have courses. Anything that jumps out, like a structured course?
A structured course, I would say, I think it depends on what you're looking to learn. I would say YouTube is actually a great place to find some of these courses. I actually would not recommend stuff I've seen on like Udemy or Udacity or Coursera and things like that. Gary Gensler, the current SEC commissioner, funnily enough, actually taught a very good course at MIT on cryptocurrencies. So I'd definitely recommend that. If you just Google Gary Gensler, I think it's like MIT crypto class, and you'll be able to find that. I think those are good courses to start with.
Yeah, definitely. I'll check that out for sure.
Sean, question. So we moved from blockchain being like, a ledger as to what you said, to images and videos. What do you think the next thing is? If I'm making sense, because I'm new to this whole world. So, please be patient with me.
Yeah, I guess what you're saying, like, what's next for kind of beyond image NFTs or music NFTs or things like that?
Yeah. What do you think is next? Granted, I think that's a very big question. I'm curious as to your thoughts. If there's nothing, then it's cool, because I don't really see how we get beyond. I mean, only like, can you NFT a game? I don't know. I'm just thinking.
Yeah, I would say like there's probably going to be a big boom in the gaming industry. So if you play any video games, especially like if you think about some of these action games where you have to like level up your gear, get new kind of for example, like role-playing game where you have to gain new items, things like that. If you think of a company like Roblox or Epic Games like Fortnite, these are really popular games over the last few years. Whenever you buy an item from that game, you don't really own it, right? You can't take it anywhere. You have to transact it with it on the ecosystem. What NFTs can do for gaming items is that you actually can own that item. You can take it to a different game. You can, as long as it has utility in a different game, you can trade it to other users as well. I think that's going to be one big application. So giving users more agency over a lot of the different in-game items that they purchase. You even think about a lot of the mobile games you play, you pay for all these little in-game upgrades and little items. So, but once you stop using that game, you can't really take those anywhere else. So it's giving those items a value, but also the ability to kind of take control of that that narrative. I think you'll see other media forms be represented by NFTs. Maybe it's videos, maybe it's other objects in, say, the metaverse, so to speak. That's another area I go too deep into, but I think that could be interesting. And then you could see NFTs represent, for example, real world assets. So I think the very first sale of a home using an NFT was conducted last week. by a company called Roofstock. And that is that was super interesting application of the kind of blockchain technology. So now what's interesting about representing a house on an NFT, if you have all the legal paperwork, is that you can actually import this NFT onto DeFi platforms and take loans against that, almost take a refinance loan trustlessly on a decentralized finance protocol. So it unlocks all these other primitives that don't exist. Like, take another example. There is a big market for basically buying and selling wine, rare vintages of wine and other types of alcohol. When you're selling and buying these quantities, you have to physically ship them across the world. But what if you could represent them with an NFT? It introduces some interesting questions around securities legislation and legality and things like that. So that'll have to be worked out. But here you can just create much more efficiencies in the market by using something like an NFT. I realize I talked a lot about NFT applications. I think that's where a lot of opportunities arise, but I think there's a lot of opportunities for DAOs as well. So thinking beyond traditional organizations, decentralized organizations, decentralized investment vehicles, et cetera. So let me pause there and see if that answers your question.
Sure, thank you, Sean. I think Anthony, you had some questions from YouTube. Oh, okay. I think you. Okay, let me get them. Can you just paste them in the chat here and just replay them to Sean?
Sure.
So, let me go to.
Ooh, Sean, while I have you,
Yeah.
can I borrow your brain and ask you? So there is this thing with cryptocurrency and criminality, if that's a word. Is there anything that can be done to safeguard, me doing something illegal and then using my money to buy crypto as like a money laundering, yeah, for lack of words, thing? Is there a safeguard? Again, new to the world, just I'm curious.
Yeah, so I would say the majority of people obtain cryptocurrency through legal means. And there's kind of anti-money laundering, know your customer protections. Typically, the majority of people get money through something like Coinbase, right? So they have to provide their government ID, et cetera, and they're able to purchase like Ethereum, for example, for X amount of dollars that they transact from their bank account. Originally, Bitcoin was used for illicit means. This exchange called the Silk Road, where basically it was exchanged for like drugs and illicit drugs and things like that. But I would say protecting yourself, like, I guess the one thing to look out for is, yeah, maybe transact with people, people, at least smart contracts and apps that are trusted or vetted by the community, that have a decent social presence, that sometimes it's hard to do this research on your own. So I think you point to one of the biggest challenges is that there's like hacks out there, right? So and they're quite prevalent, but I think part of it is just like starting with trusted entities initially. I want to be able to answer some of the YouTube questions as well. So I think one of the questions is, how do you see crypto used in the healthcare and education system? To be determined. I think the biggest application of crypto in the healthcare ecosystem is something similar to what I had shared before. VitaDAO is an example of this. So basically in biotech, I think, is where there's a lot of opportunity. So there's a lot of research projects out there which do not get funding for oftentimes not rational reasons. So and part of this is due to the governments around the world have cut basic research funding. So everything from like anti-aging to rare diseases and things like that. So What if you could enable the best researchers out there who are not getting funding to raise money through DAOs, for example? So DAOs could invest in specific areas and support these individuals and start to have ownership of those, let's say a new drug that's being developed really early on. And as that gets sold to a big pharma company and further developed, the community that helped support initially is going to share in that. And maybe some patients participated in that ecosystem as well. So I think that's the biggest opportunity for healthcare. Right now, I don't fully see great applications in the traditional healthcare ecosystem outside of like biotech and life sciences research. And maybe like health and wellness. I think health and wellness is an interesting one. I pointed to an example called STEPN. While it might not have the best token inflationary model, basically if you walk, you earn tokens. Like that's a great incentive, right? So I think there's other ways to use tokens like in addiction care. So if you think about people who are addicted to a certain substance, their brains are really rewarded to think about extrinsic motivation. So what if you could get them to like think about earning tokens versus like using a drug, right? So that would be a huge win as well. In the education system, once again, I would say like probably in terms of sharing of knowledge of the like you start to see decentralization of education and knowledge through learning DAOs. I don't know if cryptocurrency plays a role in the traditional education system. Maybe in novel forms of education outside of the traditional ecosystem. And then, Jovan, I think you had a question about blockchains being used to track logins on patient records. Yeah, potentially. Once again, this has to be done in a privacy safe way. So there are technologies out there which enable kind of privacy safe transactions called zero knowledge proofs. I think the challenge with healthcare is that the healthcare industry overall, and I used to work in the healthcare industry, is very averse to adoption of new technology. And especially new technology, which has a lot of hesitation around usage and adoption, like cryptocurrencies and blockchains. You just have to like look at the news every day, and there's like some sort of negative headline out there, and it makes especially folks who have a very traditional background less apt to take part in this ecosystem. So I think while patient records could be put on the blockchain, I don't know if that's necessarily the best idea, because sometimes if it's not configured correctly, you have potentially a huge patient privacy issue because all blockchain data is public, unless you find ways of anonymizing it. And even if you anonymize it, there's like ways of re-identifying people. So it could potentially be a lot of negative consequences there, unless it's thought through really well. Seems like there's another question here. What are the key factors to get other countries outside the US to involve in blockchain and crypto, especially in a developing nation? Typically, adoption is late. I would say what's interesting is that like crypto adoption actually has been quite strong outside of the US. Like even if you look at India, I think India is like if we kind of still put it in the kind of rising nation, developing nation category, has one of the largest cryptocurrency adopting populations out there. So I think what it takes is really a government that's willing to not ban crypto technologies and or embrace it. And then two, there being a clear value proposition for end users. So this has allowed me to move money without all these transaction fees or relying on an unreliable bank. Is this a way for me to get paid faster? Is like, what's the end value? Is this a way for new creators to earn money in ways that they typically could not? I think it has to focus on like when it comes to adoption, what is the value that it drives for those end users and beyond just speculation on assets.
Great. Did you address the question about the increased data breaches in healthcare? Is Web3 best
Okay,
alternative?
sorry,
Yeah.
I missed that. With the increase of data breaches in healthcare, is Web3 the best alternative to secure data? Yeah, I mean, I think perhaps I indirectly answered that in the sense that I probably would not recommend patient records to be on the blockchain, given all the sensitivities around individual health conditions, and even with anonymization of data, the really ease by which you can re-identify people based off of even a limited set of data. So that's probably an area I would not want to see the healthcare system go into. But I think, like I mentioned, there's other applications within the broader healthcare industry, like biotech and health and wellness, where I think Web3 is interesting.
Okay, good stuff. I think we're over time anyway, so this was really educational for me as well. Jovan, any follow-up questions before we close off?
Oh no, I'm good. Sean, thank you so much for lightening my darkness of crypto and NFTs. So I appreciate that. Even a little.
Well, thank you for the great questions, Jovan, and everyone on YouTube as well.
Yes, thank you so much. So thank you again, Sean. I think we'll do a follow-up session, as I said, hopefully the 17th or 18th of November.